In the fast-paced world of financial markets, timing is everything. Yet, for many traders, the challenge lies not with identifying trends, but rather in entering the trend with confidence and precision. Enter the pullback factor from Indicator Vault, a game-changing tool designed to revolutionize how you approach trend analysis and also entry execution. At its core, the pullback factor indicator addresses a common dilemma: how to navigate pullbacks effectively. Pullbacks are those temporary retracements within the overarching trend, often sowing seeds of doubt and hesitation, leading to missed opportunities or premature entries. But what if there's a way to decipher these market moments with clarity and certainty? The pullback factor indicator does just that. Powered by a sophisticated algorithm that leverages volatility analysis, the indicator provides traders with invaluable insight into the duration of pullbacks. The pullback factor indicator is definitely worth a closer look, but before we begin, if you find this video helpful, please drop it a like and also subscribe to stay up to date with our future content. Let's start by exploring a trading example. On the chart, I've selected the Australian dollar against the US dollar in the hourly time frame. In the background, the sophisticated algorithm is utilizing multiple indicators, including a 20-day and 50-day moving average to identify the trend. A bullish trend occurs when the 20-day moving average surpasses the 50-day moving average, signaling long trade opportunities. Additionally, the indicator uses a 50-period EMA and a 200-period EMA, and when the indicator shows a value above 1.5 on the bottom bar, it signals the end of the pullback and the continuation of the uptrend. On top of this, the indicator automatically calculates the levels for your stop loss and take profit by using the ATR indicator. The ATR, or average true range, is a volatility indicator that measures the range between high and low prices over a specified period, typically 14. All of this means is once the candle has closed that confirms the end of the pullback, I will enter my buy trade. For the buy trade, I will use the values provided by the indicator and let the trade run its course. By knowing when a pullback will end and the trend continue, we have the advantage above other traders, and we get to enter our trades with precision and confidence. Next, let's explore the other side of the spectrum and look at how the indicator is so accurate at detecting the end of pullbacks. For this example, I've selected the US dollar against the Canadian dollar in the 4-hour time frame. On top of everything we've already discussed, at its core, the pullback factor indicator analyzes market volatility. It does this to gauge the strength and duration of pullbacks. By studying price action and volatility patterns, the indicator generates signals that indicate when a pullback is nearing its conclusion, paving the way for the resumption of the overall underlying trend. This real-time insight empowers traders to time their entries with next-level precision, capitalizing on favorable market conditions while minimizing the impacts of these retracements or pullbacks. Additionally, from the chart, we can see that we have multiple rejections away from the supply zone. If we use the drawing tools available on TradingView, we can now mark these areas as follows. The reason why I'm marking these zones is that price action might revisit the zone in the future. Now, once the candle has closed, confirming the end of the pullback and the continuation of the downtrend, I will enter my sell trade. For the sell trade, I will place my stop loss and take profit according to the levels provided by the indicator and let the trade play out. By accurately identifying the end of the pullback, The indicator enables us to enter trades with precision, maximizing profits and minimizing the risk of premature entries. Next, let's explore another swing trade example. However, this time we'll be focusing on a stock index. For this example, I've selected the Dow Jones Industrial Average, or US 30, in the 4-hour time frame. From the chart, we can see that the index is currently in a downtrend after this double top rejection away from a supply zone. A double top rejection is a popular reversal pattern used by traders worldwide. On top of this, if we use the drawing tools, we can again mark this supply zone as it follows for future use. Then after this, the index started trending down, and we see a pullback in the market, which has been identified by a pullback factor indicator. The pullback shows a slight stop in the downtrend before we expect the continuation after the indicator has completed its analysis. All this means is once the candle has closed, we can enter our sell trade. For the sell trade, I will use the levels provided by the indicator and let the trade play out. From this example, we can see that the pullback factor indicator is a very versatile indicator and suitable to use across various markets and time frames, making it a valuable asset for traders of different levels. Next, let's explore another trading example, and this time we'll be focusing on a day trading one. For this example, I've selected the Australian dollar against the New Zealand dollar in the hourly time frame. From the chart, we can see that the pair started forming an uptrend, creating higher highs and higher lows. Now, the identification of the end of the pullback provides us with a great opportunity to enter the uptrend and minimize our risks. As with our previous examples, it is important that we need to wait for the candle to close to confirm the signal. While the candle is still forming, the signal might change, so it's important that you need to wait for it to close. Once it has closed, I will enter my buy trade. For this buy trade example, I will place my stop loss and take profit again according to the suggested levels provided by the indicator and let the trade play out. Of course, these levels can be adjusted under the settings for the indicator so that you can change them according to your own specific trading approach. Next, let's explore another trading example. However, this time we'll be focusing on a cryptocurrency. For this example, I've selected BTC USD, or Bitcoin against the US dollar, in the hourly time frame. From the chart, we can observe multiple rejections away from a supply zone, which I've marked in red. We can also see that every time price action rejected away from the zone, we had a small pullback before price started trending down. This time we see another pullback, and the pullback factor indicator has given us another sell signal. This means following the same rules as before. Once the candle has closed, I will enter my sell trade. For the sell trade, I will place my stop loss and take profit according to the levels provided by the indicator and let the trade run its course. By using the indicator, you can pinpoint when the end of the pullback might happen. This is done with precision and ensures that the trend resumes and you get to capture maximum gains and minimize your risk. Next, let's explore our last trade example. However, before moving forward, if you found this video helpful, please drop it a like as it really helps others find the video. For our last trade example, I've selected the euro against the US dollar in the hourly time frame. The euro USD is one of the most traded pairs and offers great liquidity for new and established traders. What we can see from the chart is the pair has made a double bottom rejection away from a demand zone. A double bottom rejection is a popular reversal pattern, often leading to a change in the trend. After this rejection away from the demand zone, price action started trending up, and we had another pullback in the market. Pullbacks are often pauses in the trend before the original trend resumes with additional momentum. This makes our indicator a great asset for any trader looking to take their trading to the next level. All this means is once the candle has closed, we can enter our buy trade. For the buy trade, I will use the levels provided by the indicator and let the trade play out. In conclusion, the pullback factor indicator presents a paradigm shift in how traders approach timing and X-ray execution. By providing real-time insight into the dynamic world of pullbacks, this powerful tool empowers traders to navigate market trends with confidence and precision. So if you haven't already, we invite you to visit our website and explore some of the fantastic promotions. The one that stands out above the rest is our TV Champ membership. With the TV Champ membership, you'll gain access to the pullback factor indicator featured in this video, plus multiple other next generation indicators. So I hope that you found this video informative and helpful. Until next time, happy trading. Bye.